Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:29 p.m. That is Central Time, and today is September 27th. Well, gold broke downwards today, so there's a new reaction low. It's closing below the psychological $1,900 level where it had bounced on several occasions over the last 3 months, and this is an extension of the 4-month decline that's been underway now. And this is there's a clear succession of lower rally highs, and that's going to have to get broken until we, or at least before we have clear evidence that support is coming back in and we're in a demand-dominated environment once more. So if we zoom out a little, we can then see I think that the next area of potential support is going to be somewhere around the lower side of the range. And that pretty much coincides with the region of the 1,000-day moving average right now. And we had a failed downside break at the end of 2022, and then it popped on the upside and got back above the $2,000 level and failed up there, and now it's coming back down again. I don't think that $1,600 is the lower side of the range. I think that was a failed downside break. I think it's more correct to say that it's somewhere more like $1,725. But we'll have to see how far it goes down, and this is very much tied to the dollar. And what's going on in here today is quite interesting. We have continued dollar strength. We have very strong oil prices. The stock market went down in well, actually went up in early trading, down in the middle of the day, and then recovered somewhat. I think part of that was to do with President Biden's speech in support of artificial intelligence. I think perhaps a bigger reason was that Costco came through with earnings, and they were quite a bit better than expected. So the share reversed a 1.5% decline to finish up over 2% on the day. So it was a big outside day. But with, I think, the much bigger story today is the continued surge in yields, and the 10-year yield was up over 7 basis points. So as long as yields are rising at this pace, it's siphoning liquidity out of the system. And I think we continue to see resilience from the stock market, and probably the biggest reason for that is the continued willingness of the US government to run significant deficits. And then, of course, there is the potential that the US government is going to shut down again in early October. I don't really think that's going to be a major market catalyst, for the simple reason that this is not the first time it has happened, and every time it happens, there's a lot of gamesmanship goes on, and then subsequently they come to a deal. All the furloughed employees get their back pay, and everything goes back to normal again. But I think this is a good place to jump off and look at some additional charts.